Good morning, traders. It's Tuesday, December 16th. It's 8 a.m. Chicago time. Derivatives trading involves substantial risk of loss and is not suitable for all investors. My personal opinions, market data, and recommendations subject to change without notice. Past performance is not indicative of future results. Lots of news to cover today. European equity markets opened slightly higher following sharp declines on Monday and are trading lower. I'm getting this from tradethenews.com. Asian markets closed lower. Ruble falls through 72 after Russian interest rate increased to 17% from 10.5%. That's the biggest news overnight. Is a very, very large 650 basis point increase in interest rates in Russia. Biggest increase since 1998's default. Gold is lower. Oil is below $60 a barrel for the first time in 5 years. The US dollar is lower versus pound, lower versus yen, lower versus euro. Sweden's central bank left its repo rate unchanged at 0%, but pushed back its view on first potential rate hikes. So you can see these banks are starting to extend out the estimate for the first rate hike. I think that's going to force the Fed to hold on to these lower rates as we see the economies around the world weakening. China HSBC December flash manufacturing PMI came in at 49.5 versus 49.8. This is a 7-month low and a first contraction in 7 months. UK November CPI registers its lowest annual reading since September 2002. Again, that's going to force the Bank of England to put off interest rate hikes. Germany had its December ZEW survey. It registers its second straight month of improvement. December preliminary PMI data is mixed. Manufacturing PMI 51.2 versus 50.3. Services PMI misses 51.4 versus 52.5, and the composite PMI at 51.4 versus 52.3. Mixed bag there for Germany, but better than what we saw in October and parts of November. Eurozone December preliminary PMI data beats. Bank of England's bank stress results came out, giving that industry or that sector a clean bill of health. Russia's attempt to defuse a crisis with the largest interest rate increase since '98, as mentioned earlier. It failed to revive confidence in the currency, wrecked by slumping oil and international sanctions. Ruble currency unable to hold on to its gains and hits fresh record lows against other currencies in the basket. Russian Central Bank Deputy Chairman Shvetsov says the market situation is critical. Central bank may take more measures aimed at stabilizing the situation following the rate hike. So this is a nightmare for Russia. And of course, this is triggered by the sanctions and further exacerbated by crude oil prices. This could have a trickle effect into Europe and so on. At 8 a.m. today, actually 4 minutes ago, the FOMC meeting began. It's a 2-day meeting. The rate decision is expected at 1 o'clock tomorrow, 1 o'clock Central tomorrow, and a press conference at 1:30 p.m. tomorrow with Fed's Yellen. Risk aversion flows in the session heightened by emerging market currencies provided safe haven flows into Japanese yen currency and government bonds. So we see money going into the yen, pushing that currency down against the dollar. The US dollar also battered by some profit taking given its recent uptrends. And then recently at 7:30 Central, November housing starts came in at 1.028 million versus 1.04 million. Expected building permits 1.035 million versus 1.065 million expected. A lot of news. And you can see that in a very wide range overnight in the S&P, 32 points plus on the range in the S&P heavy volume. At 8:45 Central, just 15 minutes after the open, we're expecting the U.S. December preliminary market manufacturing PMI. 55.3 is expected, last month's 54.8. At 9:30, ECB's Neu speaks in Paris. At 10 o'clock Central, Prime Minister of the UK, Cameron, questioned by lawmakers on energy. At 10:30, Treasury to sell 4-week bills. And then at 3:30 p.m., right after the pit closed by 15 minutes, we have the weekly API crude oil inventories. And then tonight at 5:50 p.m., Japan's November trade balance, adjusted trade balance, and exports and imports numbers are coming out. Let's look at the technical picture. So what we have here is a market that's rolling over. So far, it's been steady and calculated. It has not been news driven. This rollover seems a little more determined than the prior ones, where it just flashes down and back up. So far, we've broken out of the upper balance, which we put in the middle of last month to the beginning of this month. We broke lower through it to the next balance zone, so we traded off of these numbers. If you recall, 2029.50 being the key price in the area, and so on. And yesterday we broke through the bigger balance and into the next area. Prices in the next area of significance. Key price to test below 68.50, 64 is also key in this area. 64 represents a CLVN as well. The overnight low 61. So market's is advertising lower prices, but is not able to entice buyers to come in. The 38% pullback from the last swing low till the current high is at 70.50, which we're trading just above. Right now, again, we exceeded that overnight. The midpoint of this swing is 1939 even, 1939 even. When we look at the overnight, very clear and clean selling. It rests overnight, sells a little bit, opens, tests higher, sells off, rests a little bit overnight, recovers, tests higher, sells off, and then again rests a little bit overnight, tries higher, sells off. Pretty continuous pattern here. Yesterday played out exactly as expected per Hypo 1. We expected responsive buying to retest up into the 2010.50. If you recall from yesterday's video, 2010.50 back up, and as far as 2014.50, this notch out here, 2014.50. So the expectation is for a test of the 2010.50, and then sellers to step in, sellers to take it down this flagpole, this thin area here, back down to the 90.75 close, and for the market to continue lower because Friday's auction was cut off by time, by the fact that the session ended due to time constraints. So the expectation is for this to continue lower and make a lower low. And so we see here, we tested up to 2012 and a quarter, came all the way back to the opening swing low, and then basically, you know the story from there. There it is. That completes hypothesis number 1. Still expecting a lower low. Pulls back to the mid, and there's your lower low. Very interesting pullback to the IB low here. You can see it, IB low, LVN notch out. Very nice pullback, and then rotates down about 9 points. Excellent opportunity here, and then once again it gives us the same opportunity later in the day closer to 2 o'clock, and then the market just is unable to maintain higher prices. You could see Delta hitting the bid pretty good on the close. So again, I asked in the S5 chat room what the expectation is, whether it's likely to move higher or lower from here. Is it done? Is the move complete? And most of the answers were that it's likely to push lower, and I agree with that. This market here is unable to take back some of the very basic time frame prices, such as the low of the prior session. In other words, regaining the prior range and holding on to it, holding on to prices above the mid, getting back into the IB, unable to do any of that. So the expectations for a lower low. So this morning we see this opening right on the edge of yesterday's range, likely to drop lower into the open. The expectation for this morning is again responsive buying back into the closing price of yesterday, and if it cannot find buyers to continue the move up, then it's likely to roll over and then start to and move to test 64 below. The range has been expanding, as you can see here. You can see this is the range. This is the daily range on the regular trading session only. And you can see that the range is clearly expanding. This is, it's not common for the market to continue doing that over multiple sessions. So I expect the range to collapse a little bit today, but I do expect a test lower yet again, and then failure, then we'll see buyers, we're likely to see buyers come back in and take it back through the 87 area and back up to begin to repair some of these profiles up higher. If we look at the market profile chart as opposed to volume profiling, you could see how the sessions have pretty prolonged, elongated profiles, with yesterday's profile closing this naked point of control, time-based point of control at in the 75-50 area. So overall, and currently it's trading just on the edge of that, and it has gone down as far as where these three profiles are. So as we move these profiles together to see where the composite is, wow, this is taking a while. A lot of ticks to compute. So as we push these profiles together to see what the composite would be for this area, 1 second, it's computing again. It gives us an idea of what we should expect based on those 3 balance days in between gap zones. Again, this is really important here, this area. We have basically 3 days that are on an island by themselves, and 68 being the point of control down here, and value pushing as low as about 59.60. So we're in this, we're trading in this range right now. So we've taken back this particular zone. The equivalent of this is this composite right here. This composite tells us 68, 68.75, value low at 60, value high at 77.50. Value high is not so important. It's being pushed through. And then we have balance high at 64. So this area's got a few support levels, potential support levels here. I'm looking for the market to find a base today to start moving back up higher. But at first I expect it to test higher, fail, and then find buyers as it pushes lower. I'll leave you with that as a primary hypothesis. Again, yesterday's plan worked out perfectly. Crude oil is not able to find any support. You can see here day to day. It is making lower lows. So overall, it's not a fading market here. Just be careful with crude oil if you want to be a contrarian. There's not much below here to look at. This chart's going back to 2000, 2009, and I don't have any volume here. I need to pull in more volume and go back further and load more data to get lower prices. Yes, we all want to catch a bottom and so on, but I can tell you right now, as a trader, it's it's a very costly business to do that. So just watch yourself and be smart if you're trading crude. This product is being watched by governments all over the place, major corporations and so forth, who are losing money, lots and lots of money at these prices. So, you're trading against big money. So just be smart and make sure you stick to your risk parameters. And that's what we do best here at Stage 5, is to push people to take their losses when the losses happen, as opposed to giving away your entire account because you got stubborn on a trade. On a best effort basis, obviously. I'll leave you with that. Good luck today, and I'll catch you online. Take care.